Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex trading room for October 18th of 2020. We are going to go through standard agenda, look at our currency strength meter for the past week and month, our calendar of announcements scheduled for this week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Start with term ledger, not too much of a change. Well, we are up like 3 percentage points, but these were trades that were carrying profit from the prior week. So pretty much no significant change, and we still have 3 trades open on the pound pairs as we speak. The intermediate term ledger virtually unchanged. This account, I think it's less than a percentage point again on a couple of open trades we had from the prior week. And right now, this account is all cash. So I think we do have, no, we don't have a pending order anymore. We had a pending order on the pound Australian, gave us a little bit of profit on Friday, and then we got taken out on the retrace. We'll likely be getting back into some of these trades on the pound very shortly, as soon as we see a breakout in either direction. And on the short-term ledger, same thing, a very small change, about 1%. We had 4 trades go against, and one on Friday or Thursday that made up for most of it. So a really, really small downtick on this account. So in essence, we were flat across the board. Notes and opportunities for improvement. We are waiting on the UK-EU Brexit announcement, whether their negotiations made any progress. Last I saw from Boris Johnson is that the UK was prepared for a no-deal Brexit come December, which again, this is not news. They've been saying that for pretty much the last 4 years. So we're still waiting on something actually of substance to come out of these talks, or some announcement to come out. As we covered before on the ledgers, no significant change to any of the accounts. We are limiting trades on the short-term and intermediate-term accounts to breakouts at this point, which is just meant to bring us back from the bit of a drawdown we have on both of these accounts. So for the rest of the quarter, we'll be playing it a bit safer and doing basically the breakouts, trying to capture as much profit as we can in each of them, but sometimes, especially when the retraces hit, they're going to be smaller profits than usual, but hey, it is what it is. Commodities such as oil, silver, gold, etc., continue to hold or maintain their gains or even make new gains. And that is where we are on the week that just ended. Relative strength meter for the past week and the past month, if I can direct your attention to the columns on the extreme right. So on the monthly, the clear winner is still silver, though it did do a bit of a retracement this past week, almost to the tune of 4%, but it is still trading at multi-year highs. Gold similarly is also significantly up for, again, multi-year highs at this point. We did have some movement out of the dollar pairs, and the major movers were probably some of the euro pairs that did have either upticks or downticks along the way for the week. As regards to monthly, I think the biggest mover other than the metals is going to be the Australian Canadian at a little bit over 2% heading into Canadian strength against the Aussie. And even that seemed to be slipping a little bit as last week ended. Fundamental announcements for this week coming up, a very light calendar. We do have Fed Chair Powell's speech tomorrow morning starting at 8 a.m. We're not going to be trading that one live. That's probably going to drag on for more than an hour. And while it may add volatility to the dollar pairs, it's just not worth our time. We do have the Reserve Bank of Australia's meeting minutes at 8:30 p.m. So we'll be adding that to our evening session tomorrow. We'll probably be starting about 15 minutes late, so we're not left waiting for that to come out. And the rest of the week really has nothing that I would see as tradable on the calendar. So a very light week on the announcements. With that, we move on to the charts, commodities, and as I mentioned in one of the prior slides, oil is maintaining its most recent gain, so it is slightly above $40 and pretty much sticking to that sideways channel between 35 and 40, where it's been since sometime in May or June. And well, that's actually positive. Again, it's maintaining its gain, so it doesn't look like it's going to slip any further down. There is a very strong level of support there. Moving on to the currencies, euro dollar, it did break out of that trend line, and it does look like it's crossing the Ichimoku cloud. I'm not too convinced that we're going to have an opportunity to trade this one down. That would be into dollar strength. And my bias here is completely against the dollar. I don't see a lot of upside for the dollar until at least after the election, and that's 2 to 3 weeks away. So we'll play it cautiously. We'll see if we have any opportunity to trade it, but very likely I would much prefer to trade this one up than down. Same thing with the pound dollar. It is retreating to that outer trend line. It is acting as support. It is on the bearish side of the Ichimoku cloud, but I think there's far more upside, especially if we get some sort of good news out of the Brexit deliberations. But again, if I see a breakout in either direction, we will likely take the trade, even if it's only for short-term gains. USDJPY going a little bit flat and topsy-turvy. We can still see the dollar weakness here, but it really hasn't dropped as much as it should have dropped. It's still staying well above support, but on the positive side, it's not heading up either. So it looks like the dollar weakness against the yen is going to be holding, or has been holding. And again, we're waiting for breakouts in either direction on this pair as well. USD Canadian looks like it hit resistance last week as it tried to do a retrace up, and then on Friday bounced off and started heading down. There is a bit of room here for a trade, and this is one of those where I said last week I'd be waiting to see how this week begins before we trade it, but my bias is to trade this one down towards that bottom level of support around the 129.50. USD Swiss, same thing. It is trying to head down. It had a bit of a rough week. It went in the opposite direction. We got taken out of a positive trade at some point. I think it was this week. But for most of the week, Wednesday, Thursday, Friday, it was pretty flat. Didn't move up, didn't move down. It's staying below resistance. Not a whole lot of room for a trade here, maybe 100 pips there to the bottom. But still, if I see it starting to move, and really the next 24 hours are going to tell us that, I would take the trade as a short. Aussie dollar also at support. For whatever reason, the dollar tended to move into strength last week. Not a big movement. Didn't really break support except in a couple of isolated cases like the euro dollar. And what it's giving us now is a good opportunity for a trade in the opposite direction. But again, we have to see it moving before we take those trades. Kiwi dollar, same thing. Broke the trend line, but ended Friday just below it, but still above support. So it's still looking like a very, very bullish movement that just seems to have lost some steam and has gone sideways in the past, since I'm going to say since June through today. So a few months where it's gone sideways, but refusing to go down, but also just, stalling where it is. Aussie Canadian, this one, and I mentioned this in the currency strength meter. It did have a very sharp movement, or has had a very sharp movement this month to the tune of 2% heading down. We do have a confirmed support break. So if that continues today into tomorrow, I'm probably going to take the short position on this one and see how far we can write it down. Might be worth more for a long-term position, but again, we'll see. I'll evaluate whatever happens between now and I'm going to say 5 p.m. tomorrow and play that accordingly. Euro Swiss is very erratic. It's been trapped in a rather bouncy sideways channel for a while. It finally broke out on Thursday and then on Friday popped back up. So there really is no trade here. We definitely have a break of the wedge. It's broken the trend line, did it early in the week, but the distances here, even though they seem large, are actually very small. There's maybe 100 pips distance between the bottom and the top there, so not enough to motivate us to take any sort of trade, particularly since it moves just as quickly in both directions. So not the best risk reward scenario. Euro pound dropping very slowly into pound strength against the euro, but still not breaking support. It made a good try around Wednesday, and then Thursday went in the opposite direction. Tried to continue that into Friday, ended up coming back down. Still hasn't broken support. We have a pending order to take us in short if it does break that support, and it never came close to kicking in. EURJPY, another one that's breaking the trend line, and we see this on a few of the euro pairs. It looks like the euro is having a bit of a rough time. Not sure if it's because of the Brexit scenarios playing out or just a general feeling that it moved quite a bit into strength since April through today, and the market is either hitting pause or taking some of the profit off the table. Again, all these movements really are indicative of nothing besides buyers and sellers playing it out in the market. So it is supply and demand. If more people are selling than buying, then price is going to be going down. And that's what's been happening to the euro pretty much across the board. It hasn't been a rout. We don't see any sustained movement towards the bottom, just a lot of downward pressure, which then bounces and hits resistance again. But it has crossed the Ichimoku cloud towards the bottom. It's broken out of the trend line. And this may be another case, put some money on it for a longer term trade, especially since I believe a lot more in the yen than I do in the euro. Euro Canadian, same thing, but the trend line break was a while back. I've been waiting for a break of support, but it didn't last. It definitely broke support at the 154.65, but then ended Thursday, Friday going back up and then pretty much clinging to that horizontal. There is some good room here for a trade if we get a sustained break. So this is one of those I have on my radar for the week. But again, waiting to see how the first 24 hours play out. Pound JPY had a rough week, as did most of the pound pairs. They did some retracing. I think the one exception was, or rather two exceptions probably, the Euro Pound and the Pound Australian, which did a nice breakout towards the top, which we will see in our last chart. And we've been playing that one for all it's worth. But Pound JPY slipped back to support. And I think these are some really good opportunities on the pound pairs that have retrace, because I suspect that we're going to have an opportunity to trade them back up before too long, either this week or the following week. We're going to have a chance there. And then we're going to get into the election week here in the US, and then everything's probably going to go crazy for a bit. Aussie JPY also breaking that outer trend line. So we're having a either Aussie weakness, yen strength, or a combination of the two. It hasn't broken any of the major levels of support yet, but it does look like it's heading in that direction. In particular, I would like to see it break this prior low, which it didn't even get close to it. If it breaks this prior low, it's probably going to be a good opportunity to see how far down it is going to move. Euro New Zealand going flat, or rather staying flat. It tried to make a breakout towards the top, then went back towards the bottom. Really didn't manage to go in either direction. And that's been the case for a couple of months at the very least. So this is another one where I would be very eager to see a breakout. I don't care in which direction in order to trade that, because when this one moves, it does move hundreds of pips in a single week. So the opportunity for profit here is huge, but it just doesn't seem to have put on its running shoes yet. Pound Canadian, a little bit crazy, mostly heading down for the past few weeks. We've seen that movement towards the bottom, but at the same time, we have some very wild swings, which if they catch you in the wrong direction are going to really hurt. So we've been waiting to see more of a sustained movement without the bounciness, but it is what it is. So at this point, we do have that trend line break. I think a decent target is somewhere around the 168 down here. But I want to see it break this final level of support before we put any money on it. And more likely, I would be happier trading it up if I see a sustained bounce. Again, we're going to be trading mainly the breakout. So when it crosses support or resistance, we will take the trade. We're going to be using very tight trailing stops to lock in profit as quickly as we can. And that's how we're going to play it for the at least from now until the end of the year. Pound Swiss moving sideways, so staying very close to resistance. I think it's ready for a breakout towards the top as well, but we have to wait for it to break that resistance first. It's traveling right beneath the Ichimoku cloud. So on a break of the cloud, a very thin cloud where it is right now, I'm definitely going to take the long. And in fact, in the long-term account, we already are long on the Pound Swiss. We're slightly negative right now, not by a whole lot, but it is definitely showing the upward pressure. And last but not least, the Pound Australian. As I mentioned, this one did do a breakout this past week, and we traded that quite successfully on a couple of the accounts. And if it breaks that next level of resistance at the 184, then really the sky's the limit. We have Australian weakness re-entering the market, and on the slightest indication of pound strength, this thing is probably going to blow the roof. And we have seen that this is probably the sole exception to the pound pairs, where it's not only not gone against the pound, but it's actually moving in its favor and a little bit briskly. We did capture at least more than 100 pips on the initial trade on the Pound Australian, and we're back into that trade on the long-term account. And we're looking for an entry, or at least I will be putting in a pending order on the intermediate very soon, within the next 24 hours. So that is it for the charts. Setups we see in progress. The UK, of course, we're waiting on the Brexit announcement. Either way, it doesn't matter to me if it's good for the UK or bad for the UK. The important thing is it will make the pound pairs move in either direction. Dollar pairs, of course, the election is the main factor right now, with a little bit of COVID on the side and a dash of riots, which I haven't seen in the news as much these past couple of weeks, but I keep hearing that stuff is happening elsewhere. So I don't think we're out of the woods as regards civil unrest. And of course, the election could prove to be a powder keg. Japanese pairs, the yen is very bouncy and shows signs of getting restless. So I think there will be, and the election might be the trigger here in the US. There might be a movement in the yen pairs very soon. The CAD is unsteady. It's gaining in some cases and losing in others. Seems to be very bouncy, very prone to retracement. So we have to trade it very carefully, but it is showing signs of moving. Just not sure where it's going to be moving. And of course, the euro pairs are starting to look frayed around the edges. And as I mentioned, this is probably more indicative that they did strengthen significantly for the better part of a year. And the market may be hitting that pause button or trying to take some of the profit off the table, leading to there being more sellers than buyers, and of course, price suffering accordingly. So we'll keep an eye on these. I think the opportunities in what remains of the year, these next 2.5 months, are going to be fantastic, simply because there's a lot of stuff going on, the US elections, and the election may drag on for far more than just election day. We're used to the election being called pretty much the same night here in the US. This time, with all the absentee voting and mail-in votes and all that, the actual winner, it might be weeks before a winner is declared, and even then it might lead to some sort of judicial fight if one side or the other does not agree with the result. So it promises to be a very bumpy ride. Then, of course, we have Brexit deadline at the end of this year, where the UK is leaving with or without an agreement from the EU, and that's sure to send shockwaves through the market. When people are afraid of the pound or the dollar losing strength, they will start moving their money into safe haven currencies like the yen and the Swiss franc. So again, the currency market is probably going to have enough volatility in the next 3 months to pay for the entire year. So if there's a time to be trading, this is it. That's it for the setups we see in progress. And last but not least, a few parting words in conclusion about adjusting. And you heard me mention it before, taking steps on a couple of the accounts to bring them back to a healthy level. But trading is much like driving a car. As you drive, you're constantly making micro adjustments, and you don't even notice that you're doing it, but you're just moving the wheel a fraction of an inch to the left, to the right, just to make sure you stay in a straight line. It's not enough to point the car and hold the wheel steady, and that's under normal conditions. Sometimes you're driving and a ball bounces across the road, and you know that when a ball bounces across the road, there's probably a child following the ball very closely. You can either hit the brakes or swerve or whatever it is your reflexes make you do. But what you can't do in either of those scenarios is hold the wheel steady and ignore everything else. Trading is the same way. Whatever was working last year isn't necessarily going to work this year, and vice versa. So you're always making adjustments. Some of them are small adjustments, some of them are drastic and big adjustments, but adjustments nonetheless. So keep that in mind as you trade. You're always going to have to adapt to the market. The market is not going to be adapting to you. And that is going to be it for this session. Do I have any comments or questions from anyone? Do feel free to unmute yourselves and speak up. Okay, and thank you very much. And we will be back tomorrow evening. Have a rest of a great weekend. Take care.